in an exclusive interview, and we're thrilled to have you here.
Thanks for having me.
Thanks for waking up early to do this. You know, we were just talking about this inflation data, and before we even get into Amazon, I'm just so curious, given that you have your tentacles in so many parts of the economy, from the consumer to the business side of things, how you see things and how you see things as it relates specifically to inflation right now.
Well, what we see are consumers are spending, but they're just being really careful about what they spend on and how much they spend. And so wherever they can, they're trading down in average selling price. You know, you see you see consumers wherever they can find a deal, they take the deal. We see it's going to take a lot for people not to buy detergent or shampoo or things like that. And you can see that in the growth of our everyday essentials business, which last, Q4 of 2023 was over 20% year over year. Some of that is because people are going to buy all the time, but some of that is just because of the speed that we have, and we're getting to people, so they consider us for more. But people are still, they are still buying. They're just being careful about what they shop for. And then
but you're seeing a trade down.
We are. We see people trading down on ASP wherever they can. And then I'd say on the enterprise side, the last couple of years, companies have tried to save money however they could. And we saw it a lot in our AWS business and the cost optimization we saw. But I think a lot of that cost optimization has attenuated. And we've seen a lot of the deals that people were talking about with us for a long time, that were sitting on the back burner have started to move. Migrations have picked up again. The pipeline is really full. And I think people have moved from largely trying to save costs to figuring out how to modernize their infrastructure again, move from on-premises to the cloud, and then think about how they can use generative AI to change their business.
Are you seeing, though, on the cost side, on the inflation side, things continue to rise? Are there places where you see price declines? Are you seeing anything in terms of wages, either on your own employees or others?
Again, we see consumers are spending. They're just trading down. A place where we see it, real impact is, in discretionary items, things like TVs or computers or electronics. We're growing our market segment share at a faster rate there than others, but still at a lower rate than what we see in a healthy economy.
I want to start with AI because it seems to be the buzzword of everything. When we were here last year, we were talking about AI, but it was unclear, I think, completely where Amazon was going to play in this AI world. And you now say it is going to change everything, and that you have really almost shifted the whole company towards AI in almost every space now.
Yeah. Well, we've been saying it for a while, and I do think that AI is going to transform every customer experience that we know. And, I think a lot of the discussion has been around applications and starting really with ChatGPT, which really caught people's attention. But we think there are three big macro areas of the generative AI stack, each of which are gigantic and each of which we're investing deeply in. And, I think of it as at the lowest layer are for people that are building their own large language models. And the two things that really matter there is the compute to train the model and to run the predictions of the inferences. And what matters in that is the chip.
Right.
And then the services that you have to actually build models. And we've got very significant investments there. Most of the early AI models have been built by NVIDIA, but supply is more scarce and people are concerned about cost. And so we've built our own custom silicon in AI. We've built a training chip called Trainium and an inference chip called Inferentia that are meaningfully more price performant than what you can find out there. So a lot of the training, a lot of the predictions are going to be done on those chips. And, and then I would say at that middle layer of the stack are for people that are going to actually leverage somebody else's model, but customize it with their own data and then use our features to make it easy as a service. And we built the service called Bedrock. And a lot of the generative AI applications are being built on top of Bedrock because it's the easiest way to build a high-quality generative AI application. Then there's the applications of which, we're building a lot of them ourselves, but the vast majority of those will be built by third parties, and we're optimistic a lot of them will be built on AWS.
Let me ask you about this. Let's talk about large language models because there's just so much focus on it. You have now made investments in Anthropic, which Google has also made an investment in. You're building your own large language model called Olympus. How are you thinking about investing in things like an Anthropic versus trying to build your own?
Well, I think the one thing that we've seen pretty consistently in this relatively early stage of generative AI is that customers want choice. They're learning how to build models. They want different model types for different types of applications and use cases. They want different model sizes because it changes the latency and the cost structure. And so part of the attraction for so many people of Bedrock, I was just mentioning, is just it has the largest selection of models available. It's got not only models that we build, but also Anthropic and Meta with Llama 2 and Mistral and Cohere and Stability AI. So you have a lot of choices. And then Bedrock makes it really simple to move between models and move between model sizes so that you can actually experiment and get the right quality and latency. We're going to, for us, and we see it with our own, we're building dozens of generative AI applications right now, some of which are launched, others are in development. We find it with our own model builders and our own application builders that sometimes they want to use our own models, sometimes they want to use third-party models, and we're going to give people choice so they can make those decisions.
How important, though, is it for you to catch up on having your own generative AI large language model? Meaning this Olympus project, which has been reported on, how important is that? How far behind do you think you are? What do you have to do to get that to the same level as where Anthropic may very well be or where you believe OpenAI is today?
Well, I mean, first of all, what I would tell you is that this is going to transform virtually every experience we know. It's a gigantic space, and there are going to be a lot of very successful players in it. And if you go talk to enterprises or companies that are using generative AI, they are very excited about what we're building, and more customers are moving to our services. And we're going to have partnerships. We have a very deep partnership with Anthropic. Claude 3, which they released just a few weeks ago, is the best model on the planet right now with the best performance, and it runs best on top of AWS. And so our customers are very excited about that. But at the same time, we have a lot of experience building models at the company. We've been doing it for a long time, and we've been building our own models, and these Titan models we have, we're going to keep building those, and we're going to give people choice.
Do you think you could buy a firm like Anthropic in this environment from a regulatory perspective?
I don't know. I mean, I think we got to be careful right now in Western countries in the way that we're handling regulation. I think a really good example of that is what happened with iRobot, if you followed that. So I think it's a really kind of a sad story. It's a great entrepreneurship story where you had this this American company that invented this product, invented the category, and built a business that was almost $1 billion in revenue. And whenever you build a good business, you end up with company and competition. So they attracted these two very large Chinese companies as competitors, and they needed scale, because scale lets you buy components at the right price and invest in R&D. So they merged with Amazon, and the European Commission blocks it because they worry that we're going to feature our vacuum cleaner, their Roomba versus others, which of course is not our model, because we make actually at least as much money selling third-party items as our own. But they block it, and then immediately after they block it, the FTC comes out and says, oh, we would have blocked it if they hadn't. And so what happens? We abdicate the acquisition. iRobot lays off a third of its staff. The stock price completely tanks. And now there's a real question whether they're going to be a going concern. Turns out with these in-house vacuum cleaners, they have to map the inside of your house. That's the way they don't run into a table or a chair. So really what Western regulators were saying was that they trust these two large Chinese companies with maps of the inside of U.S. consumers' homes more than they do Amazon, even though we've been an amazing steward of customer data in our retail business and for AWS, where customers, both those businesses will tell you that. That can't be what we were going for. And so I think people don't know what they can do right now, and I just think we got to try and find a way to be reasonable in what we're doing.
The FTC is looking into even the partnership that you have with Anthropic. They're looking at the way Microsoft's relationship exists with OpenAI. I'm sure they're going to look at Microsoft's sort of acqui-hire deal. I don't know what you think of that as it relates to inflection. I mean, it's very interesting what's happening. Nobody's making outright acquisitions, but in some ways these partnerships are in lieu of that. No?
Yeah, I mean, there are some acquisitions happening, but we're consuming a lot of time and taxpayers' money with what we're doing right now, and I think a lot of it is outside the bounds of the law right now.
Outside the bounds of the law in terms of how far you think the regulators are going?
I think that some of these organizations are making decisions that are outside the bounds of the law.
Let me ask you this. Since we're on the topic of regulation, I want to get into what you've done with sellers over the past year and just what's happening on the consumer side of the platform, which is a remarkable thing given how you changed the distribution model and the like. And you now have more sellers on the platform than ever. But at the same time, you have the FTC out there saying that you are a monopoly, that $1 out of every $2 that a seller on the platform is going back to you in the context of advertising, servicing the distribution, and the like. What do you make of that?
Well, I think you got to start with facts, and if you look at on Amazon, over 60% of the units we sell are sold by third-party sellers. It's not hard to actually create software to put up an e-commerce website or storefront. It's much harder to get distribution and access to customers, which is what Amazon gives sellers. Our sellers, on average, sell about $230,000 in our marketplace. We have thousands of sellers who sell over $1 million a year in our marketplace. So sellers are making a lot more money selling on Amazon than they could on their own. Then if you look at things like Fulfillment by Amazon, which is our service that allows you to store your products with Amazon, and we'll pick, back, and ship it for you, and it also is available for Prime shipping, that saves sellers over 70% from having to do it themselves. So it costs money, so we charge a fee for it, but it's much more cost-effective for sellers. And while there's always things that we can be doing better for sellers, and we work really hard at it, we have a great relationship with sellers.
Is it a better business, you think, to have a third-party marketplace or to have a first-party marketplace? And it's very, if you look at just the margin and the fees that you've been able to accumulate from third parties, is that a better business? Is it less capital intensive? Is it more capital intensive?
It's a very good question. They're both really interesting businesses. One of the main reasons that we have a first-party business is that it allows us to make sure for the items that customers care a lot about that otherwise wouldn't happen, that you can keep the prices as low as possible for customers and keep the in-stock levels the way you want. But wherever we have third-party sellers who are selling, it's always a great value proposition, and they sell the majority of units for us now.
The NBA, does it have a place on Amazon?
I assume you're talking about their upcoming.
Yes.
Well, we'll see. I mean, it's hard not to be impressed with what Adam Silver and the NBA has done. It's just an incredible product, and it's an international product, and we have a lot of respect for them, and we'll see what happens.
I mean, how important are sports, though, for this? And could you ever see yourself spinning this business off? Is it separately, or is it so intertwined to the rest of the business?
John Ford asked you to ask me that?
No. I'm genuinely curious.
No, I don't foresee us spinning it off because it's so tightly integrated into our Prime offering. But I do think that sports, I mean, if you look at the ratings of shows every year, sports occupies 90+% of the top ratings. And so we've seen with Thursday Night Football just how many customers love that offering and how many people come to it and how many Prime subscriptions it drives. And so, Thursday Night Football has been a huge success for us. We've got NASCAR coming. We're gonna have 6 races right in the middle of the year. We have soccer through UEFA and Champions League. If you watch, I don't know if you watched the women's Final Four this past weekend, which was just unbelievable. We're the exclusive streaming partner on the WNBA, so we'll get to see Caitlin Clark on Prime Video as well. And so sports are very attractive for our customers, and you can expect us to do more.
Would you do more deals? We keep talking about Paramount, by the way, all morning, because there's lots of news going on there. You bought, obviously, MGM. Would you want to buy a Paramount if you could?
I think we're pretty comfortable with the offering we have right now, and we're continuing to produce, I think really great exclusive content. I don't know if you've seen Fallout yet or not, but it's gotten great reviews, and so I'm really pleased with the content we have, and we're just starting.